Hi, I'm Teresa Biko, Head of Business Development for the US at Aevi. I think that's a great question because it's been a problem in our industry for years. Payments are still incredibly fragmented. Specific acquirers, hardware, local methods of payment, and regulations. So that creates complexity for ISVs. And the really frustrating part for ISVs is when they begin to scale or when they're thinking about scaling and growing, they're really in this position of rebuilding pieces of their payment stack every single time. What really is missing is an abstraction layer, a true abstraction layer that separates the ISV from the underlying complexities of payments. The biggest risk is the lack of flexibility, and then that becomes a growth limiter. If you're tied to a specific acquirer or a specific device, then you're tied to that acquirer or hardware vendor's capabilities, their markets, and that may not align with yours. For an ISV to have true open orchestration is creating that abstraction layer that separates the ISV from those underlying complexities of in-person payments. And by doing so, this gives them a lot of control, a lot of power in various ways, whether it's negotiating pricing with an acquirer, negotiating pricing with hardware vendors. Because without that, they're tied to this contract or whatever's in place that doesn't give them that flexibility to grow and scale at their pace. I think it's going to fundamentally change the way ISVs look at payments. Today, it's kind of the necessary evil. Tomorrow, it will be their superpower. It will give them strategic advantage. So when they go to scale and to grow, they're going to get into markets much faster and more efficiently, and that is where they will win.